This is BT World. I am Syed Shabahat Ali, and you're watching Fault Lines. Sri Lanka is sinking in a deep economic crisis. The country at the moment is running out of major stocks, including the supply of paper. The Sri Lankan government has announced that it is cancelling the annual exam of students, which were supposedly going to be held in March, because there are not papers and enough ink pots available in the country. Not only that, 20% of the net imports of the country, that is oil and fuel, cannot also be imported, and there are long queues outside fuel stations. Sri Lankan currency has been devaluated 40% in the month of March. 200 Sri Lankan rupees for a dollar is now 280 rupees for a dollar. More importantly, Bloomberg has reported that the probability of country running into a complete economic collapse has risen from 20% to 27.9%. Sri Lankan government has also imposed ban on import of some basic items or the items of basic need. And that includes urea, which might trigger some more crisis in the near future. Our team has prepared a package. Watch the package before I bring my first guest to the program.
Sri Lanka is embroiled in a worst economic crisis since decades as the pandemic dealt a heavy blow to country's economy that depends heavily on tourism and trade. The cash-strapped Indian Ocean nation of 22 million is battling a foreign exchange crisis that prompted currency devaluation and hit payments for essential imports. Sri Lanka's usable foreign reserves are said to be less than $400 million, and it has nearly $7 billion in foreign debt obligations for this year. In recent months, food prices have skyrocketed. There has been a continued dearth of essential goods, fruit and vegetables, and long queues have formed outside petrol stations due to a shortage of fuel. According to the central bank, Sri Lanka lost $14 billion in the last 2 years, leading to contraction of the economy by 1.5%. The rapid drain of Sri Lanka's dollars has left it struggling to pay for critical imports, as currency reserves have slumped 70% in the last 2 years to $2.31 billion. Sri Lanka's president stated that his government is in discussions with the International Monetary Fund and other agencies on deferring loan repayments. Political parties and civil society groups have launched protests around the country, accusing the government of being responsible for the economic crunch.
To join me from Colombo on Skype, I have the honor of having with me Mr. W.A. Vijayawardena, who is a former Deputy Governor of Central Bank of Sri Lanka. Mr. Vijayawardena, I welcome you to my program.
Thank you very much for having me.
So we are discussing this economic crisis that Sri Lanka is facing at the moment. But before we talk about this crisis at the moment, can you explain the basic structure or the basic makeup of Sri Lankan economy?
Well, Sri Lanka's economy is actually made up of three sectors. Agriculture contributes about, say, 7% to our GDP, and the industrial sector about 30%, balanced by the services. And in that case, the services mean that Sri Lanka had been dependent on international trade throughout for prosperity as well as for the wealth creation for Sri Lankan people. So as a result, if there is any problem that has risen to the trading sector of Sri Lanka, that would have a very negative impact on the wealth creation, GDP, income, and so forth. So Sri Lanka is basically a services-driven economy rather than agriculture or industry-driven economy.
Mr. Vijayawardena, what has led to this huge crisis? It apparently looks that it has fallen from the heaven, because we haven't heard of any such thing from Sri Lanka in the past. But all of a sudden, within the month of March, the devaluation of your rupee is phenomenal, and it's quite worrying. So what has made this crisis look so haunting?
Well, it has not fallen from the heaven. Actually, it's the culmination of the wrong policies adopted by different administrations which had ruled Sri Lanka over the last, say, 15 years' time. The roots of the present crisis were sown in early 2000s when Sri Lanka adopted an economic policy concentrating on the domestic economy-based economic growth rather than promoting exports of goods and services. That is actually contrary to Sri Lanka's history, because Sri Lanka had been a trading nation, as I have mentioned earlier. So exports started declining. In fact, exports were about one third of the GDP in year 2000. It fell to 26% by year 2015, further to 13% by 2019, and now it is about 12%. So when the exports are actually lower, our imports are higher, the trade deficit ballooned, and as a result, Sri Lanka lost its opportunity to bridge the balance of payments. So what it meant was that the foreign reserves of the country started falling. And once they were falling, because they started falling around, say, 2019, when the present administration of Gotabaya Rajapaksa took over the country. And as a result, at the end of 2019, Sri Lanka had a foreign reserves amounting to 7.6 billion US dollars, which has now fallen, as you have very correctly mentioned in your program. The usable foreign exchange reserves have fallen below even 400 million US dollars. So as a result, we are unable to continue with the necessary import program for the country, because we are 100% dependent on fuel, LP gas, then wheat flour, medicines, and also the fertilizers. All these items we have not been able to now import to Sri Lanka. So there had been a chronic and acute shortage of these items, which has resulted in queues in front of the shops and queues in front of various other places. So presently, as you say, even the paper cannot be imported outside, because we don't have enough foreign exchange in the banking system. So when this happened, what should have been done is, in year 2019 itself, if the government had gone to IMF and secured the loan facility from IMF, we'd have gradually managed it. But what the government did was, it refused to go to IMF, and also it wanted to keep the value of the rupee artificially at 200 rupees per US dollar, whereas Sri Lanka didn't have enough foreign exchange to support that exchange rate. So there were no dollars available with the formal banks at that particular rate. So as a result, people had to turn to the black market, and the black market actually thrived under these circumstances. So what happened was, in the black market, they had used various modern methods of payments like Hawala and Undial to get the dollars to the black market, and the black market rates increased to about 250 to 260 per US dollar, whereas the official rate was 200 rupees per US dollar. At that rate, there were no dollars available. Importers had to wait in queues. So as a result, the foreign banks refused to accept the letters of credit opened by Sri Lankan banks. They insisted first that those banks should get a third-party guarantee, but now, of course, even a third-party guarantee won't help, and we have to make the payments in advance in order to make the imports. At the same time, the government also did several blunders. One blunder was that it offered very attractive tax concession to income taxpayers and the value-added taxpayers, which resulted in the loss of revenue by about, say, 4% of our GDP. And at the same time, they wanted to go organic overnight, and they banned the importation of the chemical fertilizers and pesticides from other countries. As a result, the farmers were starved of the necessary inputs for them to do the cultivation, which affected very badly the agricultural output, and it fell by about 30 to 40% as a result of that. So we were basically nearly self-sufficient in rice before that. Now we have to import rice from other countries, from Pakistan, India, and also Myanmar. We have to import rice now, but we don't have foreign exchange to do that. So there is a shortage of rice in the market, and the rice prices have gone up. Yeah.
Mr. Vijayavardhana,
Yeah.
I'll stop you here for a while. But as you rightly mentioned, and you also have a background from the State Bank, this is the responsibility of a central bank of any country to forecast or to foresee such situations issue timely warnings to the countries, and also to let the administration take necessary measures. Because as you said, your bank could foresee it, or you could foresee it, or every economist could foresee it back in 2019. Why do you believe there was a reluctance on part of the government to take appropriate measures? And why now they are acting? I mean, isn't it too late for them to act on it?
In fact, they are too late, and as you have very correctly said, the central bank would have warned the government of the impending situation, but that had not happened. Mainly because the new governor appointed to the central bank came from the academia, and he had he had believed in this new Keynesian type of economic ideology. So he followed the principles of what is now known as the modern monetary theory, under which they said that there is no any impact of printing money by the central bank on inflation or the depreciation of the currency. So they went ahead with this particular policy, and they started printing money. In fact, the government, because of the loss of the revenue, government had to borrow heavily from the commercial banks and also the central bank. And they had borrowed in the last 25-month period. They had borrowed some 4.2 trillion Sri Lanka rupees from this particular source, which is actually an increase of 173% over the previous level. As a result, the money stock has now increased by 3 trillion, which is a 40% increase. And the final result was the acceleration of inflation rate to 17.5% at the end of February. But the internet, because the people have to now stand in queues to get the basic requirements, and when you add the cost of standing in a queue also to the prices, an American economist had estimated Sri Lanka's inflation is now as high as 50%. And at the same time, we lost the foreign reserves, and there is a pressure for the exchange rate to depreciate. I fully agree with you. The central bank would have timely warned the government of the impending results as a result of following that policy.
Ladies and gentlemen, I had Mr. W.A. Vijayawardena, the former Deputy Governor of the State Bank of Sri Lanka, and he made some quite remarkable comments. One important thing that he said is that the current inflation in Sri Lanka is close to 50%, which is certainly quite high. The central bank had been given warnings to the federal government since 2019 that an economic catastrophe is coming in the line of sight, and they should be taking appropriate measures. They did not take appropriate measures. The domestic borrowing has skyrocketed, aggravating the Sri Lankan economic crisis, and some untimely tax concessions were also introduced, because of which the government lost some further revenue. Now, to look into the strategic and political side of the same problem, I am now joined by Amantha Pereira. He is a media researcher from Central Queensland University, Australia. Mr. Pereira, welcome you to my program.
Good to be here.
So we are discussing this economic crisis that Sri Lanka is facing at the moment. And some in this part of the world believe that these crises are more political in their nature, primarily driven out of the lack of sight by the politicians that have remained in power for the last 22 years in this country. What are your thoughts on it, sir?
Yes, I think there is some truth in that, because the current dire situation that Sri Lanka faces did not happen overnight. It was a culmination of factors dating back to years. And these include, as you rightly said, borrowings, the lack of foresight in terms of how to manage your economy when faced with a seriously grave situation like COVID. Now, we shouldn't forget the fact that before the pandemic hit Sri Lanka, one of Sri Lanka's main foreign exchange revenue avenues, which is tourism, was badly hit by the Easter bombings that happened in 2019. So in effect, before the pandemic hit, there were signs that the reserves were coming under pressure, that the economy would be under pressure. So because of that, I think the government should have taken more action or more preventive action just in case the situation became dire. So it didn't. It didn't reach out to the IMF. It didn't. It initiated certain tax concessions that were ill-advised. And the bottom line is Sri Lanka has elected populist governments continuously. Now, populist governments, by their very nature, they do not enact policies that are not popular. They enact policies that are popular. So, popular policies could be popular in the short term, but they could be really fatal in the long run, as we are seeing in Sri Lanka right now.
Mr. Pereira, not only the fact that the Sri Lankan government has refused to see the warnings being issued by the State Bank, but there were also political statements that the government was quite reluctant to go to IMF when it was pretty much required. And now when going to IMF or looking for a bailout from any external factor perhaps seems to be the only option, the government apparently is quite late in that, and IMF will be in a position to dictate the economic policies that can sink Sri Lanka's Sri Lanka into economic crisis further.
Yeah, you're right. So I again refer back to what I said just earlier. The fact that this is a populist government to enact to take relief from the IMF, you would have to follow certain conditions. And those conditions would be economic discipline, to put certain spending cuts in place. Now, those kind of decisions would not have been very popular. So this government that's in place was elected on a very populist, very majoritarian populist platform. So it thought that it could get out of this bind, but unfortunately, and unfortunately not for the government, but for the 20 million people of Sri Lanka, it has not been able to. And now it's in for the long haul. And whether it can come out of this in the short term or whether it's going to take months, it's still not clear. And right now, the situation is really dire. And when the situation at least is going to stabilize is even more unclear.
And Mr. Pereira, these are also testing times for Sri Lankan's foreign policy as well. We've heard that India has given $1 billion to Sri Lanka, which might not be really very helpful, but is at least something. But they are also trying to reach out some other countries, including the government of China. And to my knowledge, they haven't heard anything back as yet. No promises so far.
Yes, so Sri Lanka has appealed to 3 entities: the government of India, China, and the IMF. Now, since the war victory in 2009, Sri Lanka has pivoted towards Beijing in a very acute manner, and that has not been looked upon favorably by New Delhi. Now, right now, when it's in dire need, it's reaching out to New Delhi. But how this is going to play out is yet very much unclear. And the other thing is that the Chinese investments are not investments of a benevolent benefactor. These are strategic investments. If you look at some of the investments that China has done in Sri Lanka, they might not be economically performing, but they've allowed China to have a formidable presence in Sri Lanka. Take, for example, the port that it funded in the southern city of Hambantota. Now, when Sri Lanka couldn't pay back its loans, China allowed it to defer those loans by entering into a 99-year lease on that port. Now, if you look at the pros and cons for China, it's up on the deal. So what you would see is that if Sri Lanka seeks more and more Chinese help, in this case, what would happen is that the Chinese footprint in Sri Lanka and then consequently in the region is going to be larger and much more pronounced.
Thank you very much, Amantha Pereira, for being in my program. Ladies and gentlemen, this was Mr. Amantha Pereira, and what he mentioned was quite significant, that it's not only a failure on part of the economic managers of the country, but also a testing time for the foreign policy of the country, despite the fact that Sri Lanka enjoys great relationship with both India and China. So far, there is no there's no rescue in the line of sight. We'll take a break and we'll join you back with the second segment of the program. Stay with us. Welcome back. There are some growing differences between Kingdom of Saudi Arabia and United States, and this is now getting more significantly highlighted than it was before. Recently, Kingdom of Saudi Arabia has given vibes that they are going to do the trading of their crude oil with China in yuans, and the term that has been coined by Washington Post is calling it the development of Petro-Yuan. This is very important to understand that Saudi Arabia is the largest seller of crude oil in the world, and China is its largest buyer that buys 25% of its net production. That said, Saudi Arabia is the second largest buyer of defense equipment in the world. Certainly, India, our neighbor, is the first and foremost buyer of these defense goods. Now, this is development of a situation that requires a lot of attention by the strategic thinkers from around the world. Our team has prepared a package. Watch the package before I bring my guests to this part of my program.
The US dollar's dominance of the global petroleum market will face debilitating blow, as Saudi Arabia is reportedly considering accepting China's currency for some oil purchases. The Wall Street Journal reported that Saudi Arabia and China are in active talks to price some Saudi oil sales to the People's Republic in yuan instead of the US dollar. Marking a significant development, the kingdom is also considering including yuan-denominated future contracts, known as the Petro-Yuan, in the pricing model of Saudi oil giant Aramco. The world's biggest crude importer buys more than 25% of the oil that Saudi Arabia exports, and thus Petro-Yuan would boost the standing of the Chinese currency, making headway in cross-border transactions. The Chinese yuan reversed earlier declines and jumped towards its highs of the day following a report by Dow Jones about the prospects of Petro-Yuan. China introduced the yuan-priced oil contracts in 2018 as part of its efforts to make its currency tradable across the world. Saudi Arabia was China's top crude supplier in 2021, selling at 1.76 million barrels a day, followed by Russia at 1.6 million barrels a day, according to the data from China's General Administration of Customs. This striking move could chip away at the supremacy of the US dollar in the international financial system by catalyzing the de-dollarization.
In my studio, I am joined by Mr. Yasser Janjua. He is a defense analyst, and with him I have Sultan Ali Haider, who is an expert of political economy. I welcome both of my guests to my program.
Thank you.
Starting from you, Mr. Yasser, so this apparently is a move that is coming out of Kingdom of Saudi Arabia as a response to the recent retaliation by the Houthis. The Houthis were taken off the list of international terrorist organizations for a while. What are your thoughts on it, sir?
Thank you very much. The US administration under Joe Biden, removed the Houthis from the terror list in 2021 because they thought that they wanted to give the Yemen peace process a chance and activate it by creating some inroads inside Yemen. However, they are now reconsidering it after the attacks on the 30th of January in UAE. There is a reconsideration on part of the US to redesignate them as terrorists, and members of Congress and Senate have written to the Secretary of State to redesignate them as terrorists. Now, in recent weeks, America has sent Patriot missiles to Saudi Arabia on the urgent request of Saudi Arabia, because of a growing threat of similar attacks as happened in UAE happening in the Saudi, so the Saudis wanted some assistance, and Americans have responded by sending the Patriot missiles. However, having said that, the relations between Saudis and the Americans are not as they were in the Trump administration. Prince Mohammed bin Salman and President Trump had a very cordial, frank relationship. In fact, his son-in-law, Jared Kushner, was very close to Mohammed bin Salman, and that is why we saw a lot of things happening in that Trump administration, which the Biden administration is obliged to reverse, and they have shown signs of reversing quite a few things. And Saudis have not taken that positively. And as a result, Saudis have also started realigning their posture, including their relations with Iran and moving towards China, giving an indication to the US, look, we are not only dependent on you, our foreign policy is dictated by us.
But Mr. Jinjua, I'll interrupt you here. There is an important point that we need to connect to. And Sultan, if you can help me to understand if this will not hit dollars umbrella as an umbrella currency, or its image as an umbrella currency phenomenally, because this is trade between the biggest buyer and the biggest seller of crude oil in the world.
Of course, it's going to have an impact, and the sea change is going to take place because the whole petrodollar phenomena started with this. Usually, interestingly, President Nixon is not seen in a good light in the US. But I think Nixon was brilliant along with Henry Kissinger, and they created this whole mechanism where they made US the reserve currency of the world, and US dollar is the biggest export that the US has. Now, it started with Saudi, so in return for security, and it's not the security of Saudi itself, it's also security of Saudi oil passing through the international seas. So it's the US Navy providing protection. It's that kind of an arrangement. Now, with the why change is happening, that there are a series of reasons for that. But with the 25% of Saudi exports getting switched to yuan, that's a big number, number one. Number two, it sends a signal to other countries also. So the other countries may also start following suit. Now, that is a huge change, because suddenly this is sort of the biggest crack in the wall that can take place. Now, with this commodity happening, it can start happening in other commodities also. So other commodities could be other minerals, which are very important, and also in terms of wheat or soya bean or other commodities. So suddenly, the dollar dominance, which means the US dominance, it is under a tremendous threat.
Let me take this to Mr. Jinjua. So, Mr. Jinjua, do you believe that this is a major step, as Sultan Ali Haider said, of KSA moving toward the Chinese bloc? Because with sanctions on Russia and with trade war against China going on, they are emerging as a powerful bloc, aren't they?
I'll just pick up from where he was saying. Right now, the 25% of Saudi oil that we are talking about going to China converts into or translates into $290 million per day. So that's the volume of oil trade between China and Saudi Arabia. Having said that, I personally do not see Saudi Arabia completely falling into the Chinese lap per se. Saudi Arabia uses this as a leverage tool, and this is not the first time. Saudi Arabia has been doing this in the past as well, that they keep telling the US, look, we have China on our side as well. However, going into the Chinese bloc, not likely in the near future, but there will be shift in the trade volumes towards China, or the Petro-Yuan that we're talking about. That will happen. But that does not mean that Saudi Arabia can completely forget the US, which is not possible. In the current scenario, with the Houthis sitting next door and a couple of other situations, Saudi Arabia cannot afford to do that they leave USA completely. So they will balance out, but not go into the Chinese bloc.
Sultan, do you want to add anything into it?
Yes, of course. Again, it's very much, I totally agree with him. So if we look at it in terms of economy, so China is the factory of the world. So it is exporting to everyone. Now, in terms of why do we need foreign currency? Because we need to import stuff. So now, if Saudi is exporting large amount of oil, though it depends how it can use those yuan. Now, if we look at Saudi's imports, 20% of Saudi imports are from China, and China is the biggest trade partner. Imports from US are about 10%. So of course, so it suits China to keep a basket of currencies and to be trading. Now that is again the dangerous trend will start. Now you see, if you want to exchange any currency into any other currency, right? It usually first conversion is to dollars and then to the third currency. But if the conversion starts happening directly, then it creates this dangerous trend. I'll just mention one thing again. The security expert can comment better on that. That the last time historically there were two significant attempts to sell oil in not in US dollars. So one was done by Saddam Hussein, the other one was done by Muammar Gaddafi. So those were two initial attempts, and they were really frowned upon.
We know what happened to both of them, so let's get it here.
But
yeah,
if you're going to ask a question, and he can better, because being an economist, there are already 34 countries or 35 countries, I believe, in the Southeast Asian region who are already directly dealing with the yuan. They're not dealing in the US dollar. So this yuan Saudi Real trading is not going to come from nowhere. The model is already there. The Chinese are already dealing with a lot of countries directly in their currencies. So doing this is not that difficult.
but sir, just a while ago, $1,200 billion of Russian reserves were frozen. I mean, 650 were frozen and rest were with China and other countries. They have been taken off from the international trading system as well. And this is going to generate more inroads between China and Russia. So I assume that Russia will very soon decide again or announce that they are also going to follow the suit. Don't you think this will create further momentum and will strengthen Chinese economy further?
It will surely strengthen the Chinese economy, and this is for the Europeans to think. They should be foolish to let the Russians go away, because Russia is sitting on their doorsteps. Majority of their gas supplies are coming from Russia. Their oil supplies are coming from Russia. If they start doing these things, and if they sit in the lap of the Americans, they are going to lose themselves. So the biggest loser in this war in Russia or with Russia is Europe. America doesn't stand to lose that much as the Europeans do. So if they let Russians go away, they are at loss. Russia will conveniently go to the Chinese, and they have a very strong relationship. Currently also, Russia and China have a very cordial relationship. And the more they are sidelined or pushed against the wall, the Russians will go to China, and that will even strengthen the Chinese economy. The US is otherwise losing its importance and its significance. So if they don't do the things rightly now, so I mean, although this is not part of the discussion here, the whole conflict is about the expansion of NATO between Russia and Ukraine right now. If they agreed, the NATO agreed not to come ahead of the 1997 line, expansion of NATO ahead of the 1997 line, Russia wouldn't have invaded Ukraine, and this whole thing wouldn't have happened.
I agree with you on that. Your closing comments on this conversation, Sultan?
My closing comments on this conversation is that I think the whole situation has triggered one phenomena which was not expected, and we spoke about this in one of our previous programs also. So in terms of Chinese yuan getting strengthened as an alternative currency, already I think 1 or 2 years back there was a Goldman Sachs paper. It was saying that maybe in 40 years yuan would become the reserve currency of the world. Now we were talking about Saudi, since we spoke about Russia, 45% of Russian exports are to China. And again, the shock, the other part of the puzzle is that the shock that the whole world has received is, can dollar be the reserve currency? Can you keep your currency reserves in US dollars? So now this process of diversification. So diversification happens is you have a stock of US dollar securities, but the flow, you organically start changing the flow and building other currencies. So I think...
Thank you very much, Sultan. Thank you very much, Mr. Jinjua, for being my guest. Ladies and gentlemen, my guests have highlighted some very important things, and all of it to be summarized in a nutshell is that this is strengthening yuan further. This is weakening dollar with each passing day. As Mr. Jinjua said, this is more about NATO and its expansion and less about anything else. We'll join you next week with another program. And until then, Allah Hafiz.